This is Shorthammer. It is the 26th of April, 2020, and this is Trading Zones. So we started out the week with expectations that we have a little bit of movement. So what's interesting is on the MES, I know I have a weird view. This is the 4 hour. I'm kind of zoomed out. But what I want you to take a look at that I think may be interesting is this, and I'm not one of the greatest at these types of pattern readings, but this almost looks like a potential inverse head and shoulders here on the 4 hour, and we'll see if this resolves and breaks the upside. Maybe, maybe not, but we've had just a preponderance of horrible news, and still the market refuses to go down. And so what we have to look at now is if we remember back when we were getting horrible trade news that was coming out from China, and it was just crushing the market and crushing the market. And at some point, the market said, you know what? It doesn't matter, because no matter how bad the trade news is, the market felt that the Fed cutting interest rates was greater than the negative trade news that we were receiving on the inability to get a deal done with China. So, not saying that the market is pricing in deaths or anything of that nature, but the market's cold. It's all about the numbers and all about the sentiment. So, right now, when you have states opening up and restarting their economies, and the federal government basically saying that we will put as much money as needed to keep the market afloat, I think that some people do think that there is a potential for at least a little bit more upside. So be careful if you are still sticking to that thesis of coronavirus, the economy's crashing, all those types of things. All the data is horrible, but it doesn't matter what the data is. What matters is the market's reaction. And right now, the market is telling you that it does not care. Now, it may care on Sunday when the futures open, we gap down or sell off, and it may say, hey, you know what? Now we care about this. But right now, pay attention to what the market is telling you and look at what the market is doing. If you have levels that you're fading from, that's fine. But pay attention to what the market is telling you. We're pushing up a little bit. Don't get caught on the wrong side being heavy just because you're looking at the overall economic data and your expectation is we're going to go down. And also, I know this is time frame based, right? So if you're on a shorter term time frame, like I usually am on most of my trades, I don't really care because I'm just going to be following the trend anyway. But if you're on a longer term time frame where you're putting in trades and you're out 30 days of your expectations of a movement, or you're quarterly in and you're waiting for the a quarterly movement. Just be careful not to get caught on the wrong end of some of these really, really, really strong moves. That's all. So looking at this technically, you see all these little lines and things, they look weird here on the 4 hour chart. Moving on, let me drop this down to a 30-minute or a 1 hour. And when I broaden this out, what you'll see is it's just these little trend lines. And I try to delete them when I remember. But sometimes I forget to delete them and they're still there. But what you want to be aware of is when you start to see these types of candle patterns here. Look at this, how it just rounded out. Is it possible that this could have rolled over? It's possible. But when the market starts to show you that it's catching a bid at a certain level, pay attention to it. So let's drop this down to a 1 hour, just real quick. And if you're looking at the 1 hour and let me go even lower than the 1 hour, because you go to the 30-minute. There we go. So this is, let's go from where the market we open. Okay. And here we go. And so we opened, we dropped, right? And so the expectation was that maybe we go lower, make this even lower, because I want you to see this real quick. And I apologize for those that don't really care to hear any of this, but I've gotten so many messages on this that I just wanted to talk about this real quick. Okay. So what you're looking at is, so you see this drop here, right? We have a drop here. And what you see is that we push up, we reject here around that 2800 line, we go back down. You want price to advance with some strength to the downside, but we're still hanging around those 2780s and we're not getting strength to the downside as far as selling. Look at these lower wicks. Look at the strength of buying back up into this structure here. See, watch here. This is where we, boom, broke. And the buyer's like, let's run. And so even though you see this pullback, we're pulling back roughly to this breakout area, right? We're retesting that area. Look all the way across here. Look at these. Look at these in these 2780s. Look at that. Look at what the buyers are telling you. They're telling you, thou shalt not pass. Like, so unless there is a strong catalyst, when you see these lower wicks here, rejection, or lower wicks here, look how long that the lower wick of that candle is, that rejection to the downside. They're telling you that, hey, we're not going down. We refuse. You just got to follow this trend. So if you got short, and you should not be short here, but if you did get short at the bottoms here in hopes that this would roll over, and if you were stubborn and you wanted to hold that because you expect, even on this, you were stubborn and held that, you had to see these lower wicks that were telling you that we're not going down, right? That they were really strong here, that you needed a strong, clear break of this and potentially a back test and failure, potentially, of this area before you could think that we were going to roll down through the 2770s. So neither here nor there. I'm not going to spend much time on that. Got to move on. So moving on, if we take a peek headed into next week, what we want to watch for is to the upside at 2833 we rejected. That's interesting. And above that, we have 2851, 2872, 2887, 2914, then 2938. To the downside, we have 2800, 2773, 2740, 2713, 2697, 2682, 2663. Now, these different levels, you can play these differently, and I know the trend does matter. So when you're between these areas, these supply demand areas, the trend is incredibly important. So you can follow the trend and use, different EMAs or whatever you want to use in between those areas, VWAPs. You can use whatever you want, whatever you want in between these areas. But for me, I do watch on a bigger picture time frame. I do watch these areas and I try to get an idea of what the buyers and sellers are telling me when we get to these areas. Are the buyers in control? Are the sellers in control? What news is being released around these areas? Those are the things that I watch for when I'm watching the interaction at these areas. What's price? So where are we at when we get to these areas? What's the momentum? So I try to keep an eye on that. So if you drop below, like here, and we reject, I'm short this, right? But my expectation is that we go here. But when you don't see price advancing with strength, you see this kind of sideways shenanigans, that's when you got to bail. And you got to say, hey, you know what? The Bears just don't have control of the ball right here. The Bulls are telling us, and the market is telling us that there is just no advancement to the downside, which is what you want if you're short, right? And if you're long and you waited for a break back above this area here and you saw this explosion and you got long here on this breakout, then you'd wait and say, hey, I want to see advancement to the upside. And you do see a bit of it, but you may not see as much of it as you like. So you may be out on this. But when we get back to this breakout area, you may be back in. And I apologize for going too much into this for those that kind of don't want to hear it. And I will move on. So let's keep it moving. So if we're looking at the the Russell, let's pop this up on a higher time frame. Take a peek at the 4-hour. Ooh, that looks crazy. So looking at the Russ, what we want here is if you're bullish, right? You want to hold above the 1215s and you want to see advancement above this structure here. Look at these wicks. You want to squeeze in a pop. So you want advancement through 1252. And let me look at this maybe on the daily almost. You want this to explode up into this structure here, right around 1290. And if we get that and we could pop into this, we may see a little bit of selling action here where sellers try to reject and try to hold the line here. But if we get through that, now we can see there's room up into the 1350s. So what we watch for on the Russell is if we hold above 1215, watch 1252, 1290, 1350, and potentially 1416, but I'll be watching the 1350s. And to the downside, if we don't hold 1215, 1178, 1138, and potentially 1096, but we have to see. But look here, when you look at this area, buyers are here. Look at this. If we pull back to here, this area, you see a lot of areas where price was kind of sidewaysing a little bit and a lot of interaction in these points. So we'll see if this hold here, wick, and they're trying to curve us up. We'll see if this works out or if this little area here continues to reject as it has recently. And that's since the 16th, this little area here. And the sellers push us back down a bit. And then we have to see if we hold the 1204s. So that's interesting. So moving on to Amazon. Amazon's in an incredibly interesting place. If we look at this, this is interesting on Amazon here. So Amazon is squeezing, earnings are imminent. So what I would watch for on Amazon to the upside for me, because I'm primarily a retracement trader, unless I'm using Elisa and her Elisa's power of pivot script, which is predictive in nature, kind of telling me where things are going to go. When I'm not using that, I'm purely a retracement trader, right? And so watching this, I would not be short Amazon. And to the upside, I have 2450 right here, and we're sort of hovering right here at the 2410s. And it looks like if you're let me see, draw this and see what we've got here. If you draw this across the top, and this is like a super rough, right? This isn't really a good, I wouldn't even draw it there. Let me move this to another one. Let me put this here because I want you to see this. People may be looking at something like that. They may be. Got to be careful because sometimes you look at what people are seeing and they may think that this is going to do this. And so they could be betting on that and almost a self-fulfilling prophecy. So we have to see with people kind of feeling a little bit more bullish than not if that happens. What you want if you're bearish is you want this to get down here and get below this 2318 and you want advancement to the downside. So to the downside, if we were to get that, you'd be watching the 2318, 2291, 2251. And me personally, right, when I see this, I'm not really going to be short Amazon, especially heading into earnings because they could really jam, right? I'm not really going to be short Amazon unless I see weakness, especially below the 2370s. Some people may because they'll see these upper wicks here and they'll feel that this is telling them that there's rejection on price to the upside here on the last few days. But I see this and I think of Amazon headed into earnings week, and I think anything is possible. So I'm going to be careful just based on the times that we're in Amazon, Whole Foods, like we've discussed those things in previous videos. If Amazon does pull back, I'd watch this area here first, this 2186, if we see some selling action. and it's strong and we draw down, then that's the area that I would watch as first stop. If Amazon breaks out, it's gone. Clear ceilings, there's nothing there. She can run. So just be careful on this one. But this is the structure that I'll be watching for on any incredibly strong selling action on Amazon. This is doubtful because you kind of see this 2318 as the for me the base of this. Once we broke above this area, this looks like every time we get down here, the buyers are just pushing this right back up. They're trying to get us to the top there on Amazon. So that's my idea on, not my idea, but that's my view of Amazon. Okay, here's Microsoft. So Microsoft did reject above the 180s, it looks like. Pull back, held the 168. And let me scrunch this up a little bit. So hold on a second here. Okay, so this is interesting. So we have this this sideways structure here that we broke above, and then we just exploded to the upside once we did that, right? So we pulled back down here, and we kind of didn't catch any type of a bid around this area here, but we're kind of back testing it here. And there's structure here. You can kind of see the lower wicks here where there's some action in this area. So what I'm watching for on Microsoft, keep your eye on if we head up the 174.50s, 176, 180, above that 183, 185, to the downside 168, 163.97, 160.49, 156.50s. And you can really watch the whole numbers on these, the 156. Just I can be really detailed on my specific levels, but just watch for candle structure and see if we either roll here or if the buyers push us up. But you can see these segments. This is a segment. Look here to here. See, look at this candle structure here. This area is a segment. Between here is a segment. This is a segment. And this is a different segment that if we break and we hold and we get bullish into this, where you can watch a rise through the 176, potentially right back into the 180s here. If we're bullish above this area, you can watch this rise. Take a peek at Apple with earnings coming up. So this is on the 4-hour chart. If I'm looking at this like this, I would want above 284 for me to be long, and I would definitely keep it tight. But above 284, we've got the 294 area, 295, then 308. To the downside, we have 277. This area here, 271, 267, 256. If I'm looking at this, what would we're right here on this. This is like a long-term trend line. It's old. So this is like this little boom, boom, boom into here. But we have to see an advancement above the 284. So for me, I need to see an advancement above 284. And then I need us to be trending up in the market. And I need a squeeze here. Apple heading into earnings will be interesting. A lot of their stores have been closed, and I don't know how strong their online sales game is. So I will be careful running Apple into earnings, expecting them to beat. Quite a few companies have guided down, and so I would be just very, very careful playing earnings because there's no telling what numbers you're going to get, and it's the what's that guy's name? The life is like a box of chocolates. You definitely don't know what you're going to get this earnings season. So let's move on. Let's take a peek at Facebook. Now, Facebook is in a interesting situation. So let's go through our lines first on Facebook, and then we'll get into sort of some of the news on Facebook. So to the upside with earnings pending, the upside on Facebook. Next is 198, 203, then above that 208. To the downside, 191, 184, 179, 173. So if we pull this chart on Facebook, you can see these wicks here. That area that's pushing above is an area that has had a lot of, I'll say, interactions with, right? Trying to get through here was difficult. Look at that. Look at that battle trying to get through there. Couldn't get through. Got above, back tested this, held. Then we began this leg up, the slow, long climb. So we're there again here when you see this area. So you want a clear break of this area and you want to squeeze up into the 198s if you're bullish on this. I believe Facebook just put out information that they're launching a competitor to Zoom. That's ZM. Now, Zoom, if we remember, ever since the quarantine has been in effect, has been on a tear because so many corporations are utilizing Zoom for their video conferencing. Well, now Facebook has, thrown their hat into the ring and they're competing. Heading to earnings, that's very smart. Why? This is just me, just looking at this. So Google just cut their marketing budget by 50%, right? And they've frozen hiring for the year, I believe. So the reason why this is interesting is that usually when it comes to earnings, people tend to look as far as the advertising side. They compare Google and Facebook. So if Google is slashing their advertising budget by 50%, people may assume that Facebook also will be having issues on the advertising side. We don't know till the numbers come out. So it's really smart of Facebook to pivot and to roll out a program like or in a potential product to compete with Zoom, because that puts them in a almost a slightly different category as far as perception. And it's really smart that they release that the with earnings pending here. It's very smart. So be careful on Facebook. It does look strong. It does have good news. That news on Zoom and their video conferencing made that stock rocket. So we'll see if it has a similar effect on Facebook heading into earnings. And maybe people will ride this wave and jump out before earnings. I would be careful on playing this news through Facebook's earnings, because the earnings may be fascinating because a lot of their revenue is based on advertising. And I'm not sure what those numbers are going to look like for the quarter, and then if they give guidance, what that guidance would be, since we're not quite 100% sure when things are going to get back to normal as far as from an economic standpoint in the U.S. So just be careful on Facebook. CMG, and this thing is off. Nice pop off of earnings, hovering right around our 888 area. So we want to see to the upside. We have 916, 940. CMG is strong. So when this thing goes, she can go. So we'll see if she's able to pop this top here and squeeze through the 940s. Then it's clear skies. If we reject and retrace, watch the 856, the 823, the 781s, 745s. So we'll see what happens with CMG. CMG usually moves after earnings. So whichever direction it's going to go, it's only going to go with a little bit of strength. So keep an eye on CMG. But in the same vein as CMG, and look at this area here, which is very, pardon me. So if we're watching this is what's interesting. So see these areas that we highlighted in the past, right? So when we pushed up, rejection, and when we broke through, finally, we had buyers, because supply becomes demand, right? So when we watch this roll back over into this area, a break below this, look at this gap. This was a clear signal to say, hey, this isn't going to happen. So when you see this clear signal that separates from this area that was just staunchly defended by bears at one point, then bulls at the other, this should have been the signal that we're going to go lower, right? We had to regain this area. So quite a few people played against this. And if you're wondering why I'm being so detailed in some of these technical setups that I'm looking at, it's just I received so many messages this past week of people that were a little bit confused and wondering, yeah, these points are there, but what are you like? Where would you? What are signals or keys that you can look at to give you an idea of what might happen next from a probability standpoint? And some of you guys may be fib traders, and so you have sort of a different calculus at how you look at these. But I love candle structure, supply demand zones, and pivots, right? So for me, once you saw this clear break, the buyers had no intent. There's no way, they just had to give up here. It's like you're done. The way we gapped through, and Tim from over at BBS used to always say this, and it's such a great point. What he says is the best way through resistance or through demand is to gap through it. When something gaps through, like just tremendously strong gap through, that's telling you something. So this gap through was telling us something. So what's that all mean? So here we had earnings. Cool. Look at this run. Where do we back test? Right in the same area. And no, I didn't draw it yet, but it's interesting, right? The same exact daggone area is where we have the back test. Let me click this again. So it's kind of too high, right? But let me delete this. I don't like where this is. And I usually don't do this on this video, but I'll put this in. I know it's taking a little bit longer than normal. I apologize. But this 856 area. So we pull back to here. Buyers stepped in. They're defending this. They defended it here. They sort of lost the defense of it here. Got crushed on this. Rolled down. But now that we're back here, this is interesting. So as long as this area holds, the buyers may be trying to run us through the top here. So we have to be very careful, but watch this area, these 850s on CMG. If you're in, watch this area. So if you're long, then be long. I personally would be kind of be long against this area. I don't know if you're gonna wait for a pullback or if you like this as far as your risk management, but to the upside, watch this 888, 916s, 940s. And to the downside, 829, 856, 829, this 781s, 745s. But if this area fails here on CMG and we get a strong break, I will be short against this area, to be honest. So we'll see how that works out, because I'm one of those people that I'm taking profits the whole way. So if something reverses against me, I won't let a green position turn red. But this to me is interesting just based on this candle structure here and how the buyers and sellers reacted to those levels. So what people usually like to do is based on what CMG did, right? Take a peek over at McDonald's and say, hey, will McDonald's beat Big Two? Because they're slightly comparable, though they do tend to cater to a little bit different demographic. But what you would expect is McDonald's does have the ability to deliver through DoorDash, and people are probably running through that drive-through. So this could be interesting. And if you're watching McDonald's, what you want to see is advancement in price above this 187 area. Excuse me. So if you see, look at these areas here where price rejected. Right here, this is right around 183. So we're trying to advance, but look at this, these upper wicks. So we need advancement above the 187. Look at these lower wicks here. We need advancement above this 187. And what's going to be interesting is when we advance above that area. Let me see, where is that tool? Here. Watch this area here. Okay, come on, lock that in here for me. So once we advance above this 187, watch the 191s. Earnings is right around the corner. I'm not sure if anyone's even interested in even messing with this. But once we run into these 191s, the 191 to about this 196-ish area, look at how long we were in this channel. Like we pull below, pull right back into it. So this is an interesting area to watch on McDonald's, the 191 to 196, right? And we're right below that. So we'll see if we can advance up into that area. And if we do, be careful. See if we could break into this channel we were in for a few weeks. But McDonald's might beat. So if we do, watch McDonald's to the upside. We have 187, 191, 196, 201, 206. To the downside, we have 180. No, it's not. 178, 171, and 161 on McDonald's. Those are levels that we're watching. So we'll see if we see advancement in price above 187. And then we'll be really aware, hyper aware of what happens at 191. This is over to Goldman Sachs. Now, Goldman Sachs is interesting. Financials and banks have been kind of, depending upon the week, right? Either taking a beating or kind of catching a bid. So what I'd watch for on Goldman Sachs, let's see, where is it? Let me switch to a daily view because I really want to show you this. Okay, where are you? Here. So look at this area here on Goldman Sachs. Very interesting area. So let's draw a little box here. And I apologize for those that are like, this is taking way too long. Just kick out the information that we want. And we can get back to celebrating our draft. And my Cleveland Browns had a pretty good draft, but they do all the time. See what it does this year. Okay, so let's see. So this was a channel that Goldman Sachs was in for quite some time, right? So you see this channel, and this channel from the January 19th or January of 2019, I'll say, all the way through November, this channel was relevant. And you just watch this chopping around. We pull below, pull right back into it, pulled above, pull right back into it, above, pull right back into it. Then we had a little bit of battle here in this area. So a clear break of this area was a clear short, right? Because you know that this channel is so strong that if someone's a buyer and they're watching this, they're saying, "Hey, man, look at how much time that this stock spent in this area." So once we clear that, and doesn't this kind of remind you of the chart we just looked at on CMG? Not exactly, but just look at the gap down, clear break. This is clearly saying, hey, buyers want no parts of this area. So once we had the clear break, gap down here, pull back up, then we're selling off to the downside. So now we're pushing back into this area. What we want is price to advance above the 189 to catch hold of this previous channel. And, you know, like they said in Frozen 2, water has memory. Stocks and price levels have memory, right? So let's see if we get above this 189 and we see it squeeze up into the 207s, or if we just bounce around in this for a while. But this will be interesting if we can regain the 189s to see if we kind of move up and squeeze up into the 197s, then the 207s, and if we can break that to see just how this works out and what happens here. I'm not overly bullish on banks just based on all the things that are going on right now. But if it does get into this 189 area, in the short term, I'll take some trades on this, potentially some day trades or some multi-day trades, short-term swings. But below here, let's watch our price levels. So to the upside, we've got this 189, we have 197 and 207. To the downside, we have 171, 166, and 157. So keep your eye on Goldman Sachs. Has a few interesting setups that that might be solid to play. But this channel area to me is incredibly interesting on Goldman Sachs. So the aforementioned ZM. What's interesting is we saw this, we were kind of taken off, and then we saw nice little sell candles. Let's break this down to the 4-hour. And this happened when the news came out that Facebook was throwing their hat in the ring. And we have to see what Monday looks like, if there's continuation or if the buyers don't care. And, after that news came out, they want to run this back up. So if you're playing ZM, the levels you want to watch is to the upside, 164, 174. To the downside, watch this 158 area, 150, 154, 149, and 143. So I'll look at this area where you saw buyers step in. So we had this, boom, 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 springboard. So we'll see. We do have some upper wicks here, and we can see we're a little bit above. Wicks here, wicks here, wicks here, a little bit of area here, here. So we'll see if we can catch a bid. See this. Catch a bid from above this 158 and pop to the upside, or if the investors in ZM feel that Facebook is definitely a strong competitor and that there may be more downside risk here, and they start to get out of the way. But I would watch these different levels to see if buyers step in and try to save it or push this back up a little bit. But be careful on ZM. With Facebook throwing their hat in the ring, that could be a sign that more competitors are on the way. And also, you sort of have the details, right? It's the details of maybe the initial shock is what caused this sell, but you never know where buyers or investors in ZM may see value points where they want to get back in just because ZM has such a strong lead. And Facebook does, remember ZM had that pullback based on I believe security issues where people were able to hack the passwords of some of the meetings. So that caused a pullback, and Facebook historically has security issues, right? So will people trust Facebook to conduct their corporate business meetings? So it's one of those things where you have to look at the details to see, yes, we had this initial pullback, but will there be continuation to the downside, or do people feel that ZM has a strong enough market share and strong enough lead in the category where Facebook, even if they do enter, will not be a strong competitor? So we have to see. Let's move on. So Intel came down on earnings and caught a bid right around this 55 line. Why is that interesting? If we look at this, look at what happened at the 55. Tops here. So when we gapped above, when we talked about the gaps, we had to gap through above this area, and supply becomes demand. So look at the pullbacks to this area. Buyers are strong. So what do we expect from this? Not 100% sure. You got to watch, because this looks as if the buyers are trying to give us a run to the upside here. So if I'm keeping an eye on Intel, the levels that I'm watching to the upside are 60, 62, 63, potentially 65, but you see some upper wicks here where sellers were trying to defend. We did see a pop here, but quick retrace through this level. So watch the 60 hold to see if we can advance above that. And above the 62, if we get strength above these upper wicks here. And look, we have a gap. So we'll see how that goes. And to the downside, clearly the 55 is being defended. You see how the buyer stepped in here, 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 and here, roughly in the same area. Buyers are stepping in. So eye on SPY. If you're looking at SPY, see, this is just all interesting. Let's see. I don't have to go back that far. I could just look here. Look at this area here, right? So above this 273 line and below this 287, look at this battle, like knife fight in the phone booth here, right? So what we want to watch for is a break of this 286 area. Look at these upper wicks, the rejection, where the buyers just could not advance the price. The sellers just said no. So you see right across here also. So what we want to see is, if you're bullish, you want these 273s to hold. And what you want in actuality is a clear break of this 286 level and a squeeze up into the 294. So hopefully you get through these areas and you see an elevator up sort of situation into the 300s, like 307s. That's what you want to see. So you want a clear break of 286 and then bullish, increasing volume, momentum, squeeze up here through the 294s, then a pop and a rip into the 307s. That's what you want to see. So to the upside above this level, we have 286, 294, 302, 307, potentially 315s. To the downside, we have 280, 276, 260. And see, this may be an area where buyers step in, looking at the candle structure there. Then 250. But definitely keep an eye on this 286 to see if we can pop this. And if we can pop this, there is a chance that we might catch a bid and a rip and a run up into the 307s and potentially higher here. Take a peek at ABBV. So ABBV is, look at this structure here, here. To the upside, we have 84, then we have 88, then 92. To the downside, 81, 79, 77. I'm being careful on bio companies just because right now there's so much energy around the coronavirus and who's going to have the cure and who's going to have the tests and all those types of things, where some of these companies are competing. And if they sort of like Guild had the other day, where they didn't necessarily have the results that were expected and they dumped, it's hard to tell what some of these companies may be working on in the background. So those are some levels that are interesting, but I am not playing. Take a peek at Dollar Tree. So Dollar Tree still have not gotten up to this area yet. I guess we kind of did in March and rejected. Pull back here, here. I don't really see anything here. I guess you could say that's like kind of so that maybe, but I'm going to stay away from Dollar Tree for right now. To the upside, we have 79, 84, and 86. In the 86s, I would be interested to look for potential play in this area. But to the downside, we have 72, 65, and 60. So this may just end up going to the upside, but I'm gonna be careful on that. Pardon me. Okay, take a peek at CI. So CI, let's see what we have here. So on CI, what we want to watch for, they have earnings coming up. I would actually wait for earnings and play them after earnings. To the upside, 190, 202, 206, then 215. To the downside, 181, 173, and 163. There's something interesting, and I don't want to get off too far off topic. Something interesting going on right now where a lot of, and I don't know how this would affect a company like Cigna, right? They're the health insurer. So a lot of people are not going in for procedures because they're afraid to catch the coronavirus from the hospital. When you have thousands of healthcare workers that have contracted the virus, there is a fear there that people are not going in for certain procedures. Now, how will that impact the bottom line? I'm not sure. So we just have to see. Um, we know that hospitals are getting a lot of business right now, and that probably means insurers are paying out a lot of money. But I am not sure how this will affect them going into their earnings. I do know that I do think that they own Express Scripts. I think that's the company they own. I love that setup with CI, the ability to be able to I believe, deliver medication. So I would keep an eye on CI post earnings to see how they react. And usually on earnings, once they begin to move in a direction, they continue in that direction at least for a few days. So I'll be watching CI for potential entry post earnings to see if we get some continuation in either direction, to be honest. If you liked this video, please don't hesitate to tap that like button, and also to subscribe to our channel, Power of Pivots, where you can look forward to receiving more content from me, but also great content from Elisa as she shows you how she utilizes her Power of Pivot script to find great intraday entries, plays on futures, and also swing plays. Um, please remain safe. Have a wonderful week trading, and thank you for your time.